I would also like to thank uh, my mentor, our guru, Makaran sir, for this insight which he has given over a period of time on this subject. Our R&D department, who has read more than 400 cases on insider trading law, and Yashika, who just gave an introductory session. This entire presentation is crafted by her, and lot of inputs has come from her side. So, without much ado, let's deep dive into the subject. Um, During this presentation, guys, if you have any questions, feel free to post in Q&A box. You have that, or in the chat box at the end of the session, or we will try to take it up. Um, Insider trading law has been one of the dear subject of the regulator. We all know. Um, why so RPT, PIT, these and now these days corporate actions have become a very close to heart subject. PIT in specific is very dear because it has direct correlation to the trust in the market. PIT expects us to identify price sensitive information, disseminate price sensitive, to arrest that price sensitive information, to share it only on a need to know basis. If there is a leak, we are expected to investigate that leak. If it goes out in the market, it is expected that we have to verify very quickly. Even if it is an inadvertent disclosure, we have to verify, either confirm, deny, or clarify our position, irrespective whether I am coming at top 250 or not. Is expectation of PIT regulation. It also expects us to maintain a structured digital database wherein we maintain a log of with whomever we have shared UPSI, whoever have access to UPSI. Why so many protocols is also something which we will have to be uh, we should be cognizant of. Friends, just imagine, I'm sure you would have your own portfolio, you would also invest in script. Majority of you may do that. Just imagine, would you want to invest in a company in which information, there is no great clarity as to how the business is running, if there is any shortfall, any unpredictable jolts which are there, or there is something really wonderful which is happening which you are not aware of, or which comes to the market in very late, or which comes to the market but which is not backed by the company. I'm sure, as compared to this kind of a company, you would want to invest in a company who gives information timely, who gives guidance, who tells you that if there is any roadblock which is coming, or there is a hurdle which is coming, so that you can take an informed call. Uh, just extrapolate this thought. I'm sure you would all close down to a fact that you would want to invest in a company which has fair dissemination process, fair UPSI arresting processes. Just extrapolate this, multiply this with all the investors we have in India and abroad who are investing in Indian securities market. The biggest impact would be that if this information asymmetry increases, if people within the organization they take advantageous positions, they take benefit of their advantageous position, market will lose its trust, and therefore the entire demand supply chain, which is the demand supply correlation which is there, that will also go for a toss, which would ultimately lead to a lower valuation, liquidity issues, and in most extreme cases, market failure. That's what George Ekoloff has been trying to highlight us in his article, "The Market for Lemons." And same is the principle which SEBI is also following, and therefore we are seeing a lot of changes, lot of guidelines, lot of guidances, lot of specifications which is coming from the regulator for all of us. This is a trajectory of last 2 odd years. wherein for the first time in June 14, 2023, there was a materiality threshold criteria, quantitative materiality threshold criteria, which was introduced. Before this, we didn't have thresholds, and majority of the companies didn't disclose enough under the garb of business as usual. And with the introduction of maturity thresholds 2 to 5%, everyone started applying these particular line items and try to understand whether it is disclosable or not disclosable. Thereafter, we saw SEBI came out with rumor verification, market rumor verification concept, and there they said that a certain cadre of companies, it is compulsory for them to begin with that whenever there is any market news in mainstream media and there is a significant market reaction, we are ought to verify that particular information. Either we claim that it is true, it is untrue, and whatever it is, right? I my personal view on this is that this was a very constructive way of moving ahead of regulation formation for that matter, because my belief is that SEBI had two options. Joseph. SEBI had two options. Either they investigate the leak of UPSI whenever there is any inadvertent disclosure also. Either they investigate leak of UPSI and see that who is the one who is the just give me a moment, please. Yeah. Either they investigate that who has leaked that information and corner that person and levy consequences, or constructively they thought that if there is such inadvertent disclosure in the market, if this news is coming out in the media, then it is company who should come step forward and clarify whether this information is true or not. It was a very beautiful change which was brought in by SEBI. Thereafter, we saw in December 12 and December 12 there was a big amendment which came thanks to the expert committee recommendations which came in, followed up with December 31 circular, minimum information circular, wherein the timelines or the strict timelines of 30 hours, 30 minutes, 12 hours, 24 hours, that was revisited, and especially for just a moment. Yes. So as I was saying that 30 minutes became 3 hours, the timeline for ease. So my team came and just gave an input that there was a black mark which was coming at the top. So just we were trying to correct that. Coming back to the topic, timelines, there was an ease. From 30 minutes, the timeline was extended to 3 hours for events which were approved or actions which were approved in board meeting, and the board meeting concluded after the trading hours. So that was a big change for all of us and big respite for all of us, which came in. Thereafter, on Feb 25, there was a great guidance which came from industry itself, Industry Standards Forum, in consultation with SEBI, came out with a standards note which gave a lot of clarity and brought quite a few standardization exercises amongst the industry at large. We'll see few of them today also in this particular presentation. And last but not the least, March 11, 2025, UPSI definition was amended finally after I think so 2 or 3 years. It was amended. Before that, there was a reference of material event information under listing agreement, which was subsequently deleted, and then SEBI revisited that, and now we have few items coming from Reg 30 for that matter. So we'll see what are those changes. But again, this slide only emphasizes, or highlights that how particular SEBI is about material information and UPSI, or more precisely, how particular SEBI is for timely dissemination of information, for preservation of UPSI, for identification of UPSI. uh, they are it comes in the top five category for all of them. So in this next 60 to 90 minutes, we will try to see that what does it all, what does this amendment brings to all of us. The million-dollar question: what is UPSI? This is the definition which we see. This was the definition which was there earlier. Financial results, change in capital structure, change in KMP, dividend restructuring. This stage, there is an introduction which was made by adding expansion of business in one of the line item, and which brought to a parameter that any new line of business or a new segment if I'm entering, or probably if I'm going for a new product launch, or if I'm acquiring a particular uh, business from a particular third company or a third entity, or if I'm doing a capacity addition, all of this may also lead to expansion of business. So this definition was there. Expansion of business is an introduction to that. We also saw a few more additions. Now, before I go to this addition, one submission which I would like to make to all of you is that this UPSI definition, which has come by from SEBI, is an illustrative definition. It is not exhaustive. It is inclusive definition, and therefore these are only to bring more and more clarity for all of us. Which also means that there would be events or information which would be there beyond this as well. Plus, there is a confusion that whether these all elements which have now been made part of UPSI definition explicitly, whether that itself will be as it is classified as UPSI or not. So we'll see how this definition is constructed and what is it saying in this entire session. Credit rating change, any change in credit rating. So they have excluded ESG rating for sure. But change in credit rating is something which has been highlighted very clearly. In fact, it only says change in credit rating, but it doesn't say change in outlook. Whereas in Reg 30, if we see, especially the minimum information circular, it also talks about change in outlook as a material event for disclosure. So one question which comes to the mind is whether change in outlook is UPSI or not. My submission, friends, is that when it comes to change in rating, usually in most of the cases, more than 90% cases, it is preceded with a change in outlook. Either I'm going from a positive, from a neutral to positive, or from a neutral to negative outlook is one way which gives a clue to the market that probably in quarters to come we will either see an upside in rating or a downside in rating. Therefore, my submission is that outlook change would also or may also be considered as UPSI, and so goes for the credit rating. Friends, one more submission which I would like to make is currently I am just decoding this UPSI definition in its literal meaning. I am not going behind the intent and whether this can be challenged or not, which we will see in the upcoming in next 60 odd minutes. For now, I'm just trying to read out the changes which has come in this particular definition and what does it mean for you and me. Moving ahead, PI and FIA agreements, change in control and management. I think so. This is self-explanatory. Whenever we receive any such information from the promoter or the holding company, for that matter, that there is an agreement which may constitute to change in control or change in management, then that would naturally be a UPSI. Now, this item didn't need an explicit mention, but thanks to SEBI, we are now having this in an explicit manner. This is coming in the UPSI definition. I will first cover the green ones, which are beyond doubt, which are very obvious that this would construct UPSI. Similarly, winding up and CIRP cases, these are extremes in these situations. In CIRP, the word admission is the key word. These days, it has become very common that there are creditors who take us to IBC to recover their debt, be it disputable, be it non-disputable. SEBI has been cognizant of it and they have used the language of admission of CIRP as a stage even for disclosure and even for UPSI for that matter. My submission would be, however, that when it comes to CIRP or winding up, the moment you receive the notice of this kind, if it is frivolous or if it is beyond doubt, you are very clear that this is going to get extinguished, this is not going to lead to even this is not even going to get successful at admission stage. You may still not consider it as UPSI, but if you have a reason to believe that this application which is filed with IBC may lead to a situation of admission, then and if you have that kind of a probability, then definitely you should consider it as UPSI, and whoever is in the know, for them trading window will be closed and so on and so forth. Next would be forensic audit. Again, here they have given reference to Reg 30, Schedule 3 for that matter. So forensic audit also, I'm not deep diving for now for this particular session, but we should be all very careful when it is about forensic audit. There are a lot of literatures which are available which states that forensic audit done in routine nature, which doesn't impact the company, all right, need not be considered as UPSI, but forensic audit done for identification of fraud, which may potentially impact, which may be potentially material also, would require disclosure as well as would be price sensitive for that matter. The remaining ones, guys, which are appearing in red, fraud, default, change in directors, auditors, action initiated, order passed. I'm sure you and me, we are a bit skeptical whether this is UPSI or this is not UPSI, or whether this can be UPSI in all such situations or not. For example, fraud and default. There has been very recent case also wherein one particular managing director was alleged that he has undertaken fraud with another entity, has undertaken fraud to another entity, and the company in concern where he was serving as managing director was questioned, but it came out very clearly that it has got nothing to do with the company. And this fraud and default, my submission is that is also confined to the company only. It has got nothing to do with a third party. Uh, Fourth element which is coming is change in directors, auditors, whether in routine course when we appoint someone or someone who retires uh, from their position, whether that would be construed as UPSI or not, because change means anything, any alteration means change for that matter. In fact, if we see the language, they have been very categorical about resignations, or they have been very categorical about superannuations of certain cadre of people. But when it comes to auditors, for that matter, or directors for that matter, non-executive directors for that matter, they have not given any such explicit exclusion from the definition of UPSI. Whether this can be challenged, this cannot be challenged, we will see in the upcoming slides. Action initiated or order passed is another uh, pain which has come in front of us, that since it is explicit being mentioned in the UPSI definition, therefore any disclosure under 19 and 20 of clause Schedule 3 Part A Para A by a plain reading of this definition would fit under UPSI definition. uh, when it would not fit, or what are the mechanisms we can have in place to not consider them as UPSI. In what situations it would not be considered as UPSI, we'll see in the upcoming time, in next 60 odd minutes. Similarly, banging of order, litigation, guarantee, key license regulatories, all of these are linked to para B maturity thresholds. And if all of this warrant a disclosure under materiality under Schedule 3, under Act 30, then that will by default be considered as UPSI is the plain reading of the law. There has been some missing misses also, which is appearing in the right side of this particular slide. Be it RTA change, one-time settlement with bank. These are some very high-level subjects and very critical, which is not mentioned in UPSI definition. Closure of any new unit or division, um, agreement which creates a restriction or a liability on the company which is material enough for disclosure, promoter related events or information. These are things which have not explicitly been forming part of UPSI. But my submission to all of you is that this doesn't necessarily mean that these are not UPSI. In fact, all of this can also be UPSI. And we as an organization will have to keep on evaluating. Second last submission before I move to second next slide. We saw that there is a mention of expansion of business in the UPSI definition. Now, if we see on the in that particular definition, in that particular inclusion, they are also mentioning about other transactions. So they are talking about schemes of restructuring plus expansion of business plus other transactions. Now, what other transactions are they talking about is something which is not very clear. Our submission is that possibly strategic tie-ups, closure of units or divisions are some of those examples which may fall under other transactions, or again we need to refer the materiality criteria. Last but not the least, if we see the UPSI definition apart from the list which is appearing in the main paragraph of UPSI definition, it says about information, event or information about the company or about the securities of the company. Now, what does this mean? We will see in few minutes. But this is something which I would request all of us to take a note of. We move ahead and we will see some examples which are in public domain and which are often construed as UPSI or there is a market reaction. There was a scenario wherein in one of a company, uh, so it's very common for all of us, right, for giving a disclosure these days for litigations, especially tax litigation, be it direct tax or indirect tax. We have seen many disclosures coming into the market wherein company has disclosed the particulars of litigation, but in the cell item of financial implication or implication of this particular litigation or dispute, many companies write that there is no impact, there is no significant impact, is something which is mentioned. But still, companies are making this disclosure is something which needs to be evaluated. Now, imagine something like this happening for this company that they have made a disclosure that there is a dispute with a tax authority, which is going on at Supreme Court level, and Supreme Court gave a stay order to a GST show cause notice. That share GST show cause notice was worth around 845 crores. Now, the moment company made a disclosure to public at large that look, we have received a stay, the market reacted to it, and there was a 15% surge in price. Naturally, you all know that if there is such kind of a surge, then we receive love letters from stock exchanges. And in that stock exchange love letter, we see that they ask us question that what is it all about? There is a questionnaire of 8 to 13 items which comes. And the million dollar question was whether this stay which was received on GST show cause notice from Supreme Court authority, which was a tune of 845 crores, whether this was a UPSI or not. Now, I often submit, friends, that uh, any event or any information has a life cycle of its own. The moment they would have received a show cause notice, they would have evaluated whether it is material or not, and they would have made a disclosure. Subsequently, whenever there is any material development, we as an organization, we are supposed to make a disclosure to public at large. But the moment we are making such disclosures to public at large, we are also in a way giving an opportunity to the market to react to that particular update. Naturally, why we give this disclosure is because it is prescribed under material event information, which is Reg 30 for that matter. But the moment we give, there is an opportunity for public to react to that particular information. The same thing happened over here. The moment the show cause this update was given, 15% market surge, love letter came from stock exchange. The question which comes to our hand is the update on tax litigation UPSI or not? How to judge it? My submission, friends, would be that now this is very common for all of us, right? The moment we intimate something to stock exchange, there is this question which comes, which also brings a point that the burden of proof, whether this information which is disseminated to public at large by me under Reg 30, whether it is UPSI or not, that responsibility is always on me because UPSI identification is a system, a mechanism which company needs to have. Now, in this particular case, my submission would be my that had this been so in the impact on financials, they wrote when the disclosure was more they wrote that there is no or minimal impact as far as this show cause notice is concerned. And since this was in the same line of the stay was put by the Supreme Court on this GST show cause notice. So since it was on the same line, therefore, according to me as an organization, there is nothing which has changed, and this is happening as per my own. As my own analysis, which I have given to public at large, and therefore there is no reason for me to consider it as a UPSI. Had it been the other way around, had this been not a Supreme Court judgment, had this been a tribunal judgment or a High Court judgment, and I would have made a disclosure that there is no or a minimal impact, whereas the authority has given an order that look, this is tenable and what the show cause notice which has come makes sense. This would be a material development which would be against what I have already slated, and that would naturally be a UPSI. So there are few points which we can take from this slide as one, burden of proof is always on us. Two, we need to have a serious rationale as to why it should be considered or why it should not be considered as UPSI for that matter. Let's take another example. Few more examples. There was an FMCG company who had received sanction for two batches, two of the batches of production that they cannot sell it in the market. Now, since it was a sanction on the company chose to disclose that under Schedule 3, Para A, point number 20 for that matter. And under that particular para, they made a disclosure. Market reacted. The question is whether this was UPSI or not. I'm sorry, here the market didn't react, but I'm just trying to put a situation in front of you wherein this kind of a disclosure, since now in UPSI definition, we are seeing action initiated or order passed, is a language which has come and they have linked it to point number 19 and point number 20. This kind of a situation would also be contemplated whether it is UPSI or not. Going by a plain reading, it says that it is a UPSI. according to us, it's not a UPSI. How and what to do is something which we will see. But naturally, I don't think that this should be classified as a UPSI. I will take another extreme case which is going rounds in media these days, which is of a large organization wherein, pursuant to a circular, they had to revisit their books. And while revisiting their books, there was a significant impact on their balance sheet for that matter, which in a way met the maturity guideline which is given under Reg 30. In fact, there is one line item which is coming in schedule para B, which talks about impact on regulatory change. All right. Now, this was a derivative out of a regulatory change, and there and which had a material impact on the balance sheet. Now, the question in hand is whether it was UPSI or not. There is already an ex parte order which has been passed by SEBI on this. Up till now, SEBI has concluded it is very clear that this is a UPSI, is something which we have to see, and therefore these kinds of events or information we will be always tilted to classify it under UPSI, and it is emanating from point number 20 and point number 20 of para A only. Next element, or sorry, it is emanating from your para B item, applying the maturity guideline. Now, there was another uh, case wherein there was one company who had received a direction from SEBI stating that you and your subsidiary. In fact, that was an activity which was being done in subsidiary, and there was a circular which came from SEBI that you and your subsidiary cannot do this particular business uh, uh, for till further direction. And when this event happened, the exposure of this event or this exposure of this business was not very significant. It was very minuscule of the top line, consolidated top line of the company, and the market also didn't react to that particular information once that circular came out. Though there was lot of media news revolving around that particular event. So therefore, again, question comes: is this action taken, which is in point number 19 and point number 20, whether that would be considered as UPSI or not, and when it would be considered as material? There are confusing signals for sure, which is coming from the data which is available in public domain. Few more cases, which is again very critical, though not coming directly from like 30 events or schedule 3 events for that matter. uh, we all know, friends, that whenever promoter takes any position, just give me a moment. Sorry. Whenever promoter takes any position, especially when they are liquidating their shareholding or they are pledging the shares, it is not positively or it is not well perceived by the market. In many cases, there are a lot of write-ups revolving around it that uh, whenever promoter liquidates or creates pledge, it creates jitters amongst investors and market reacts negatively to it. Similarly, we also saw a recent case wherein the personal life of one of the promoter unfortunately impacted the price of the company, and therefore I parked one subject in the top in the UPSI definition that it also talks about any information pertaining to securities of the company. So here, selling, pledging, or buying of shares by promoter group can be considered as UPSI many times. Personal life matter I touched briefly. I would not like to talk much about it, but this is something which we all have to be bit careful about whenever we receive such information as a compliance officer. One other elements which I can share, which is other than Reg 30 events, is the flash reports or the MIS which we have. Many a times, many companies, this is a very common practice that they disclose their KPIs, the performances of their KPIs to public at large. And whenever there is any significant variance in the performance, market often reacts and in a way which also would evaluate or contemplate that these MIS or flash reports are also sometimes UPSI. So this is some these are some live examples which I am sharing. I am not saying that not I'm always saying that these are UPSIs or these are not UPSI, but we are saying that these are definitely creating volatility in the market, and investors, basis the information which is being disclosed by the companies, they are reacting to that particular information. And therefore the question comes is, how do I determine what is UPSI? Up till now, what we have understood is that UPSI definition is illustrative in nature, number one. Number two, we as an organization, we are supposed to make disclosures of material event information on a timely basis. And whenever we make information on a timely basis or we give information to the market reacts, and there is SEBI and stock exchanges who often ask us questions whenever they see this kind of a market reaction or surge in volume in trading. They often ask us a question that is there a UPSI which you have, and whether you have considered that as UPSI or not, who all had information about that particular project, and so on and so forth. They even go to an extent wherein they ask for the copies of SDD as well. Therefore, it becomes very, very important. Uh, and last but not the least, we also saw the UPSI definition, which is bit confusing. There are certain things which we would like to believe that this should not be considered as UPSI, whereas since now it is an explicit, it has an explicit mention of in the UPSI definition, then whether we can do something about it or not is something which we saw up till now. And therefore, the million dollar question again is how to determine what is UPSI. Historically, friends, we have seen some extreme cases. Some of them are driven by press releases, languages, some are driven by conduct, some are driven by market reaction. And we see scenarios wherein something which would not make any mathematical sense, for example, Edelweiss subsidiary, Edelweiss who itself, whose turnover is, whose net worth is 40,000 crore, acquiring a company which has a turnover of 4 crore, by no stretch of imagination can be UPSI, but but owing to the press release and the market reaction, SEBI as well as SAT, they classified it as a UPSI. Friends, I'm putting it in a very simplified manner, but if you read this SEBI and SAT judgment, you will have more insights on this. In fact, I often say that when it comes to Edelweiss judgment, it's an 80-pager order. First 40 pages, if you read, you will believe that what company is saying, right? And when you read the next 40 pages, you will believe that what SEBI is saying is also making a lot of sense. So I am not taking any side, but what I'm trying to tell you is 40,000 crore net worth company acquiring a 4 crore turnover company, by no stretch of an imagination, mathematically or analytically can be considered as UPSI. Similarly, a company whose turnover, who has backed an order in its during its business, right? By doing its own business. Infosys, an IT company, they are providing IT services only. And while they are performing by giving that service, during that offering of service only, they backed a deal of $1 billion, which was 1.1% of the revenue, right? And SEBI said that SEBI alleged that, right, that this number is, this number is when have you received any order which is of this value? and company said, no, this is for the first time we have received this value of order. And then SEBI tried to say that this order therefore is not in received in your ordinary course of business. Though it didn't went into adjudication, ultimately it was settled. So we will never find out that who was right or what is the right way of thinking. But point here is that again, mathematically, none of these orders make any sense for being categorized as UPSI, but all of this have been adjudged to be as a UPSI by the lawmaker or have been contested to be considered as a UPSI. Friends, in fact, there has been committee reports, in fact, SEBI reports, internal reports, SEBI comments, wherein SEBI has often said that UPSI, given the demographies we are in, given the kind of the different sectors we have, given the different life cycle which every company has, SEBI cannot decide what is UPSI and what is not UPSI is something which is already appearing in public domain, and therefore the responsibility of identifying UPSI was always on the company. However, it becomes extremely difficult for people like you and me to exactly predict that this event would result to say 3% change, or this information will result into minus 3% change. It is not possible. There are so many factors which play a role, and therefore making an exact prediction is next to impossible. In fact, if exact prediction is made, a question of manipulation can also come into play. But now SEBI has given some indicative parameters to all of us. This has been historically, now there is some indicative parameters. Just like we have seen in Reg 30, which is deemed material and parameter based material. In UPSI front also we are seeing that there is a similar approach which has been adopted. For rumor verification, we have this criteria 5%, 4%, and 3%. Uh, 5%, 4%, and 3% is the criteria which has been prescribed. This is an indication also for a sense that possibly this can be a UPSI. So any event which you think will create volatility of this size will be considered as UPSI. If, and again I will make a submission that it is very difficult that we construe it as we able to compute that okay, this information will result to 4% change. It is very difficult, and therefore now in a way of an explanation, SEBI has introduced the quantitative criteria, which is prescribed quantitative and the deemed material criteria which are there for materiality. Through by way of explanation, they have introduced that in the UPSI definition as well, which means that any event which we are disclosing as material would under be it para A, be it para B of part A of Schedule 3, that would be considered as UPSI by default, and therefore, and I request your attention to the explanation which has been introduced, and therefore all the examples, all the disclosures which we are making is therefore you know will be by default considered as UPSI by SEBI. We will see that how we can rebut that, but we will come that at a later stage. For us, what is important is to understand also that how these quantitative criteria come into play. Thanks to ISF, now there is a great clarity which has emerged, stating that if I am doing any particular event, for that particular event, there is no single criteria, there are three criteria as far as quantitative threshold is concerned. So up till now, what used to happen is we used to compute in such a fashion for materiality that you have 2% of turnover, 2% of net worth, and 5% of average PAT, which is there. This was the criteria which was, and whichever is lower was our reading, and therefore majority of the companies, if not all, used to fall in a bracket of 5% of average PAT of last three financial years. But now what they are saying is, thanks to ISF again, they are asking that the balance, any event, say for example, capacity addition, if we are doing capacity addition, we have to see that what is the value of investment I am going to make for that particular capacity addition. Whatever is that value, I have to compare it with my 2% of net worth. So if I am going to make a capex of say 500 crores and my 2% of net worth is say 300 crores, then 500 is greater than 300 and therefore I would warrant a disclosure. Similarly, anything which will any same capacity addition, what is my projected turnover? What is my projected profit to that particular capex, to that particular capacity addition is something which we have to project. And for projection also, they have said that we have to see for next calendar, the next 4 calendar quarters. So that projection we have to make and compare it with my 2% of turnover. Similarly, projected profit, I have to compare it with my 5% of average PAT. Similar examples I can give is, say, for example, litigation. Litigation, I will have to see from a net worth context and also from a PAT context, because uh, litigation will directly take away my profit, and which also would mean that it will directly take away my net worth, reserves and surplus for that matter. There would be turnover will not be the criteria. So again, for an example, if my maturity threshold is say 500 crores as far as 2% of net worth is concerned, and say my 5% of average profit is say 100 crores, and if there is a litigation which I believe is falling under say 250 crores, so 250 crores is less than 500 crores, therefore under this I will not be required to disclose. But definitely 250 is more than 100 crores and therefore I would warrant a disclosure. Had this been a scenario that the litigation would have been worth of say 50 crores, then it would have been less than 500, it would have been less than 100 crores, and therefore no disclosure would have been warranted either. So this concept has been there is a principle which has been used, a doctrine which has been used, which is redendo singula singulis. So whoever is curious can read upon that particular doctrine more and find out that what does it actually mean. This is what you will boil down to. Now, since I am on litigation, I would also like to bring in, which again ISF has brought in. Friend, why are we discussing materiality in UPSI session is because now the materiality criteria which is there has been introduced in the UPSI definition itself. They have simply said that any items which are appearing in this UPSI list, for that the materiality criteria would be same as which is prescribed in para A and para B. And if we do a careful reading of all those line items, you will find that all of them falls under either para A or para B. So we have no other choice but to apply those parameters to evaluate whether it is UPSI or not. And hence we are having this better understanding on how to apply these maturity criteria. And I am only picking up some things which are very, very critical only. Coming back, since we are on litigation front, litigation again wonderfully, ISF have done a very wonderful thing. They have introduced, they have indicated us to a direction of Ind AS 37, wherein we have to do a PPR analysis, which is probable possible remote analysis. So if there is any litigation dispute, be it tax litigation or a non-tax litigation, be it a show cause notice for that matter, because show cause notice is assumed to be in dispute stage. It is definitely not a litigation, but it is definitely at a dispute stage because show cause notice comes after careful perusal of lot of information for that matter, and it is issued by a regulator. Therefore, there is a dispute, there is a disconnect between both the sides, and therefore ISF again gives this clarity that this show cause notice will take the form of a dispute. So any tax and a non-tax litigation or dispute or fraud by employees, because we it is again we do not know the actual impact which it will have in my P&L. For all of this, they have resorted to this PPR test. uh, Simpliciter, if there is a litigation which comes, which I believe is frivolous in nature, therefore I will categorize this as remote. And there is a method which is given in Index 37. So when I'm saying that, which I consider it as remote, which means that I have gone through that process and I have made an assessment, and based on that assessment, my conclusion that is that it is remote. So if it is remote, it will not even be provided for, it will not have any contingent liability, and therefore it will be in remote criteria. And I would not make any disclosure anywhere under Reg 30. I would not consider it as material for that matter, and therefore it will not be a UPSI either. However, if that same litigation or dispute is either considered to be probable or possible. Probable would mean that I am providing for it in the form of a provision in my P&L, which means my profit will go down, or possible, which means that I will be disclosing it in the contingent liability, which means it will come down in my balance sheet. Below my balance sheet, it will be disclosed as a contingent liability. So the moment I decide that this is probable or possible, which means that this is material enough for disclosure. Up till now, what used to happen is this call used to be taken at the after the end of the quarter, when once the at the time when the financial results are being crafted. However, Reg 30 expects that this assessment has to be done in case of tax litigation dispute, it has to be done within 24 hours. In case of a non-tax litigation or dispute, it has to be done in 72 hours, which brings a scenario that this PPR conclusion I will have to make within 24 hours or 72 hours in consonance with my stat auditors as well. Here is where things become more and more complicated, because company would want to take a call that this is remote, and we have seen many such examples wherein companies of the belief that this is remote, this will not even come in contingent liability, this will not be provided for. But stat auditors insist that no, we are of the view that this would at least form part of contingent liability, or this is something which we would ask you to provide for. And if you do not do, then we will have to make a report in our, we will have to make a mark in our report. And therefore, everything boils down to a scenario where either we provide for it or we make a contingent disclosure of a contingent liability. So my submission to all of you friends is that if if this happens after the end of the quarter, we would have missed the bus of 24 hours and 72 hours, which means that this discussion has to happen on a real time basis within 24 hours or 72 hours. So this again and again from a UPSI context, the moment you receive a litigation or dispute which is of a value which is more than your maturity thresholds, which is 2% of net worth or 5% of PRAT, then by default, you may want to consider it as UPSI. And upon conclusion, upon determination, you will either make, if it is remote, you will not even disclose. But if it is probable or possible, which means provided for or contingent liability, you will make a disclosure within 24 hours or 72 hours for that matter. So this is absolutely critical. Another element of litigation dispute again is when there is a common thread, there is a common subject line, and often we see situations wherein there are tax disputes which are going on at various forums, and the oldest one is usually in the apex court or in a higher court, and that particular subject matter is yet to be decided by that apex court for that matter. But the moment that apex court makes a decision, the subsequent litigations which are there at various forums, we will get a great clarity for all of that as well. So, for example, if there is an expenditure of certain nature, which for every year I have classified is as business expenditure, and in Apex, and there are multiple assessment years which are at various forums. So the moment Supreme Court decides that yes, this is a business expenditure, everything, which all my remaining assessment years will also get a clean sheet because the Apex Court has decided. Or the other way around, if my Supreme Court or the Apex Court has decided that no, this is not a business expenditure, therefore this is disallowable, then all my subsequent years litigations, which are for different assessment years, would also get a negative remark, and I will be exposed to that liability. What SEBI is trying to say is that we club all of these orders, club all of these litigation disputes which we have, and evaluate collectively whether this is going to be material enough or not. And if that is material enough, then I have to make a disclosure immediately. And which also means that if it is material enough, then I have to classify it as UPSI. Same theory, same formula for GST also, same formula for other disputes also, which you would have at various other forums. So this is again very relevant. Now, we saw that up till we one learning in this particular one summarization of what we saw in last 15 odd minutes is that one, the maturity criteria is now defined under the UPSI definition, which resorts us to para A and para B, which means that these quantitative criteria or deemed material events are UPSIs for us, because in the first part of this talk we saw that UPSI definition is illustrative in nature, and here we are seeing that the only criteria which we have for UPSI is para A and para B. Uh, and therefore now it becomes very important for us that we evaluate whether that these informations are really UPSI or not. And I would like to draw your attention to some items. Say for example, dividend, which I have been doing giving for years, same amount of dividend which I have been giving for years. Would I want to classify it as UPSI? Many companies do not object to it because already the trading window is closed, and for financial results, and therefore they are okay with dividend being considered as UPSI. But fraud, penalty fine, which we talked about in point number 20, now we have penalty fine. If it is one beyond 1 lakh, 10 lakh, I have to disclose within 24 hours. If it is less than that, then I have to disclose in my quarterly report. But this but UPSI definition doesn't have a discussion, doesn't have a distinction. It all says is that any action taken or order passed, and below in the explanation it says the maturity criteria is nothing but para A and para B maturity criteria. So para A criteria for us would be any and every penalty fine. But this doesn't make sense, right? This is not UPSI. How can a 10,000 rupees or a 50,000 rupees penalty or fine be considered as UPSI? Similarly, fundraising. Now I may be in a financial sector. Now there is a change in language. If you see, they have in UPSI definition they say fundraising would be considered as UPSI, and therefore the question is that any and every fundraising, how that can be UPSI. In the beginning of the financial year, would have already taken approval of the shareholders. In every AGM, I take approval of shareholders and take a blanket approval. Does that mean that thereafter, every point in time when I'm raising fund, will that be a UPSI? So these questions are there which are bogging all of us. Uh, I would like to call out this unique, very isolated case, but a wonderful case. Havells fans, um, their promoter took position, and this is an adjudication order at SEBI level, not even at SAT level, SEBI level, wherein wherein the promoter took position in the shares of the company in the month of January, when he had access to the MIS financial results of December quarter, SEBI alleged that the position which was taken in the month of January was insider trading. The, the promoter argued that given that this quarter was an ordinary quarter, though I grew by 10%, but I have been growing approximately around 10% quarter on quarter, year on year. And therefore, this is an ordinary quarter. And therefore, this should not be ordinarily called as UPSI. In fact, if we see the definition of UPSI, there is a language which has been introduced, which is ordinary, including but not restricted to. Now, what does this ordinary mean? Means is usually this would be considered as UPSI unless and until we rebut to it, or unless and until there is scenarios to believe why it should not be considered as UPSI. This is bit going beyond. No, I will not say going beyond, but this is very very fine reading of the law, uh, which, given the situation we are in, is necessity. And here we are saying that in this particular case, SEBI has also said that financial results is not UPSI, or trade taken basis access to financial results was not considered as insider trading. Now, this is an exceptional case. I'm not saying that this is a routine. For routine, what we have been doing is something which we continue to do. But we can take you out of this case and slate it out that not every time what has been mentioned in the UPSI definition would be UPSI. Is a legal argument to it. In fact, I would like to take a step back and like to try and understand what is UPSI in real sense. UPSI across globe, they have been using this terminologies, their definitions have been using these terminologies of price sensitive information or material information, inside information which may significantly affect the share price. India talks about not generally available and materially affect the price. United States says material as per reasonable investor and not publicly available. Canada again says would reasonably expected to impact the market price and value of securities, and Singapore again is on the same lines. And therefore, the combination of these three things is in essence the UPSI. My humble submission is that the current version of UPSI definition is nothing but uh, but an outcome of the current scenario we have, current practices we have in industry, and the difference between the current scenario, the practice of the industry versus the expectation of the lawmaker. All right. However, in essence, the UPSI definition revolves around these three subjects only, which is material information, which has a potential to create a significant material impact on the price as a reasonable investor, and which is unpublished in nature. And there's, however, when we are doing this now, we are walking a very tight rope, and a very thin difference is going to be there, and the burden of proof will always be upon us whenever we construe a particular event or information as UPSI or not UPSI. And I'm sure you all would have witnessed this time and again through the various communications which happen through stock exchanges and SEBI, and through the cases which we are seeing around us. All right. So burden of proof will always be upon us, and therefore we will have to be very, very careful. Now, how do I determine what is UPSI and what is not UPSI? And here I would like to draw your attention to a SODI committee report, wherein they have made a very fine comment. They say that this UPSI definition is subject to of is adhered to facts and laws. It cannot be made generic. So if my fact says another thing, fact says A thing, then it can be UPSI. But if I add A plus Y, then probably with that fact that need not be UPSI. And a law definitely wherein we saw those principles of anything which is material, which may create significant market impact, and which is not generally available. So it's a combination of fact and law. And ordinarily, these things which are there, which are slated as UPSI. Now, if we have to rebut to that particular list, um, and again, my humble submission is we will have to be very careful when we make this rebuttal. Whenever we make a rebuttal to this particular definition, we will have to be very careful and we have to see these three parameters whether that event or information which is there in my hand is routine in nature or not. Uh, Routine in the sense, has it been happening very, very frequently? To whether this is consistent with a long history. It's not something which has happened in last 2 quarters or 3 quarters. It has been happening for years in the making, and therefore the market assumes that this is something which would happen. Say, for example, if we talk about borrowing here, borrowing, I have taken an approval, I am into a finance sector, I borrow and I lend, right? Then how can borrowing be considered as UPSI? It has been considered as to be, there is a long history to it. It is routine in nature, it is consistent with my long history. However, the third element is equally important, which is predictable in nature. If I have been taking approval of 2000 crores, 2000 crores year on year, 2000, 2500, 3000, all of a sudden I am taking approval of 10,000. That loses the predictability feature characteristic. Similarly, litigations. Many a times we have seen, we have arguments that tax litigation is very, very common. I do not deny that. But do we have enough predictability to it? That this will definitely will be concluded in our favor. If the answer is yes, then why not? Why should I consider it as UPSI? So these three elements are very, very useful. Another example which I can give is of dividend. We have so many companies who have been giving dividend consistently quarter and quarter, year on year. All right. My humble submission will be that if they don't give dividend, that would be a UPSI. They giving dividend in the same price, same range is definitely not a UPSI, something which can be concluded. But given the nature, again, the context is very important. Now that there is a prescriptive UPSI definition, prescriptive formula for determination of UPSI, it is it may lead to a scenario wherein certain items we would not want to consider it as UPSI. There we resort to the language of the definition wherein they say that ordinarily following would be considered as UPSI, illustrative list would be considered as UPSI, and when we are challenging that definition, the burden of proof is always upon us. And when we are challenging that definition, this rule is something which we will have to be cognizant of. Now, what do I do? We have a lot of systems. Now I'm coming to the systems part, friends. Uh, what do I do as a compliance officer, or I'm leading this PIT function in my department, in my organization? What do I do? How what kind of systems I need to introduce, or how do I need upgradation? My submission is that world around us is changing like anything, ever evolving, and therefore it will constantly require upgradation. There are some elements which we all of us have to look out for. Provisioning. We saw the provisioning in contingent liability. We saw the PPR test. If our financial results are having some exceptional provisioning or explicit mention about contingent liability, which was never there. Impairment of assets. Many companies, their assets get wiped off through by way of impairment. This is something which we will have to, when we receive financial results, when we are seeing in sitting in board meetings, this is something which we'll have to cognizant of. In fact, I will want to go a step ahead. whenever we are engaging with respective departments who are taking care of drawing out the financials, we will have to have a discussion, specific discussion revolving around this particular subjects. And here is where you will get elements of UPSI within your organization as well. The press releases which we do, various occasions, in numerous occasions, we have seen that there are adjectives used in the press releases. SEBI, there was a consultation paper out also wherein SEBI said that press release we would want to consider it as UPSI, though they have not gone to that extent, thankfully, that's a great thing. But we have also seen that many companies have started disclaiming in their press releases stating that this is not a material event or this is not a UPSI. So when we are making press release, there is something also some we have to look out for. Investor meets, speeches, annual reports, whistleblower, these are all sources of information. These are all sources of information or raw material for a regulator, for your consultants to garner that what are those critical event or information which we as an organization have, and which of them can be possibly considered as material stroke UPSI. Now, when we say that, now I'm again on system. So this is one system that we need to find out vulnerable areas, areas wherein we can pick what is UPSI, what is not UPSI, which is going out from company, may not necessarily from your desk, but something which we will have to be cognizant of. So all these areas, this is just an illustrative list. This is something which we will have to pick up. All right. Next, second. Now, if you see the ISF Reg 30 note, they have said that we need to give awareness through training periodically to our relevant employees so that they flag of potential material event or information which would be eventually be used by KMPs for determination whether it is material or not. And once that determination is done and that information is mature enough, we make a disclosure to public at large, which has to be timely within the prescribed times of SEBI and comprehensive and adequate. Now, if there is any miss, if there is any delay, in fact, there has been one scenario wherein there was a delay also, and SEBI intervened and SEBI had penalized the relevant. They have asked. This was a settlement order. They have asked the company to take action against the relevant employee. All right. So this. So what's happening now is for SEBI, if there is any delay of disclosure, or if there is any miss of disclosure, it is very easy for SEBI to find out that which of this step is missing or is weak. Now, I'm just taking a hypothetical situation that there is a company where there was a delayed disclosure or there was a non-disclosure, and they are SEBI is going into investigation. SEBI is asking whether there was a determination, whether KMP is determined or not, whether they considered that particular event for evaluation or not. If not, then KMPs are at problem. If they have evaluated whether that is documented or not, or is this something which is assumed by all these gentlemen or all the KMPs for that matter? Then again, SEBI says that this is an afterthought. So, point being that if the determination is improper or the documentation of determination is improper or the determination is missing, then KMP is something SEBI will go after. If KMP say that this information never came to my desk, then SEBI would move one step ahead and they will see whether the nodal officers, stroke relevant employees, whether they flagged this potential material event information or not. If you see if your company, if you see that if you see your materiality policy, you will find out that there is a line which will appear that this materiality policy facilitates all relevant employees to disclose potential material event or information. This is also forming part of Reg 30. This is also forming part of ISF Reg 30 note. So all these relevant employees, so SEBI will investigate whether if the determination could not happen because of non-receipt of information or delayed receipt of information, then relevant employees or officers will be questioned. If relevant employees or officers say that I didn't knew that I was supposed to make this disclosure to the KMPs, or I was not clear about the expectation of the law, then the question would come is whether did we create enough awareness? Did we give enough clarity? Did we intervene at the right point in time or not? All right. So this mechanism has to be in place often, and up till now, I would say till a year back, there were many companies who didn't had this system, but I think so. Last 2 years, there has been enormous change in industry practices, and many companies have resorted to this relevant employee model, wherein they have actually on paper casted responsibility on head of departments to flag this information off, and they have been creating a lot of awareness, lot of doc, a lot of frameworks to facilitate this information. There is one more submission which I would like to make in this on this same subject from a UPSI front. Now, as I said often that for UPSI also there is a life cycle. We may have hundreds of ideas. We means an organization, several departments included, will have hundreds of ideas which they would be exploring, evaluating. You know. So that's stage one. That is not when UPSI starts. UPSI will start at stage two, wherein there is a meeting of minds. Say in an acquisition case, it is non-binding MOU. In credit rating, it is when I receive the draft rating letter from the rating agency. For capacity expansion or for mergers, whenever the management or council gives a okay that Mancom gives an okay that okay, let's proceed with the execution for this, which would include to take board approval, which would include to hire consultants for working out on the schemes or modalities of that particular corporate action. That's when your UPSI starts. That's when the trading window closure has to happen, STD entry has to be made, the definitive part has to be worked upon. And the moment we receive a board approval or we sign a binding document, that's when we make a disclosure under Reg 30 for that matter. So, friends, here the submission is that whenever it comes to a Reg 30 item, now that uh, this delay is impossible, if we have this mechanism of of putting responsibility on HODs, we are creating enough awareness and we are telling them that in stage two itself, you will have to highlight to me that there is something which is happening. I am considering it as UPSI. Therefore, as a secretary compliance team, I will monitor the progress of that particular corporate action or that event for that matter. And the moment it reaches stage 5, I will make a disclosure. This I am making this statement I am making more from a scenario wherein the UPSI is emanating within the organization. If it is coming from outside the organization, I I I I am I empathize a lot that within 24 hours or 72 hours we will have to make these disclosures. And I have been having lots of discussions with lot of companies wherein we have calls at 11, 12, or in the morning 7, 8, and we are disclosing whether this has to be disclosed, not to be disclosed, who are to engage and what not. All right. So, but the submission here is that with this joint reading of Reg 30 and UPSI, the new version, it will be very, very difficult for companies to say that why this disclosure was not made timely, number one. Number two, why this UPSI was not identified also timely. So this systems needs to be built in, more and more awareness has to be done. And when I say system needs to be building, which means that we will have to propagate in what timelines this disclosure has to be made, For each department, we need to have a specific list, not a generic list, but an indicative list that this is potential material event informations with possible triggers. Give enough training that how do they apply these triggers. Have a lot of awareness sessions, FAQs, flyers, screensavers, and whatnot. But at set periodicity, keep it going. Last but not the least, a lot of reconciliation. So once we have delegated, we also need to monitor whether these things are happening or not. We need to partner with them. We will have to keep on discussing their documents. Say if it is a P&L balance sheet, we have to discuss with the controllers. If it is a legal team who is giving a presentation at boardroom, then that presentation has to be discussed with them. Whenever there is any media release which is made by IR for that matter, then that has to be discussed, or a product team or a marketing team, then that has to be discussed. That reconciliation of mind has to happen. Plus, these disclosures which are going out, and we are making a lot of disclosures these days. RPT disclosure we are making half yearly. We are making corporate governance disclosures. We are making Reg 30 disclosures. We are making BRSR report. We are doing annual report. We are doing each of this information, each of these disclosures. We will have to reconcile and see whether there was any UPSI or not, which is now being disclosed, which was earlier not disclosed or earlier not made entry in SDD. So this reconciliation model has to be set. Lot of think upon software. I know of a couple of companies for sure who are already working on this software. There are a lot of engagements which I have been talking about. Tagging events with disclosures. I spoke about that how Reg 30 and UPSI now is like a prequel and a sequel kind of a relationship which they have with each of them. Frameworks we need to adopt. Do efficacy checking. Under 9A audit committee has to review the efficacy of the systems which we have. These efficacies has to be done, has exercise has to be done very diligently, and constant upgradations have to be done. Benchmarking practices, keep on speaking with your peers, your consultants, and see what more you can do or what better you can do. When I say you need to do a lot of these things, you don't need to increase your volume, but you and me, we need to be more efficient, effective for that matter, and therefore these propositions probably deploy a few dedicated resources for this element. I guess these days IPF, RPT, PIT are certain things which has drawn a lot of attention. CSR, BRSR, these subjects itself has drawn a lot of attention in addition to our meetings which go on, or annual report which go on for so many time, right? So this is something which we will have to do specifically for PITS. Well, I'm coming to the last part of my talk, friends, and this is a very light version of summary, which we all have to bear in mind. One is that there is an information asymmetry which we need to appreciate. We would always have more information. We, as in all our company employees, our DPs, KMP, SMP would always have more information and critical information from public at large, and therefore it is very important that we take up this responsibility, and the burden of proof will be always upon us. Okay, this is something which we will have to be always careful about, and therefore, whatever we do, we will have to create enough documentations. We will have to create enough records with us so that tomorrow, if it is questioned, we are able to demonstrate. We have to be very timely, very timely. Um, I cannot emphasize this enough. Many a times we do this kind of discussions over weekends. It's definitely not easy for me as well, for you guys as well, I'm sure. But there are no weekends when it comes to material information or UPSI. Um, these are exception matters, friends, and it requires immediate attention, is what I will simply submit. Transparency, whenever we make disclosure, we will have to ensure that it gives a complete picture. If we make half-hearted disclosure or half disclosure, it is not going to help. We are only going to invite more and more questions from public at large, or from investors for sure, but also from the regulators. So we will have to be very, very appropriate with our disclosures. I am not discounting the weightage of involving or engaging all stakeholders that we will have to do. In fact, I have been always advocating that whenever we make disclosures, we will have to take care of each stakeholder whom we have. And therefore, that is something which I would leave you guys with. I think so. This is about it. What I wanted to share for now. Happy to take up question, guys. If we have any.
So there are five questions
All
in the
right.
chat box. I will read one by one. So first one is by Mr. Avinash Jha, a proposal to discuss acquisition and board meeting. Will it be UPSI?
A proposal to discuss acquisition and board meeting. Um, sir, I have shown one. So acquisition, we saw a scenario which is very, very extreme. Edelweiss case I highlighted. In that particular case, SEBI considered it as UPSI, though it was predominantly because of the press release language. I would also submit that we have large conglomerates like HUL, Marico, who have been constantly acquiring a lot of businesses, Reliance, who have been constantly acquiring a lot of businesses. And therefore, for them, probably they can, evaluate and take a careful call that that may not be a UPSI. But for a company who has been growing, who have been doing one or two acquisitions in a year, for them, it would be a UPSI. We can always work upon, since this comes in para A item, therefore there would be an element wherein if I'm having acquiring only 5%, still it may be construed as UPSI is one argument, but it is rebuttable in nature. So we can always work upon it. Which acquisitions I would consider it as UPSI, which not, is something which is my submission.
Thank you, sir, for the answer. So next
Yeah.
question is, at which stage credit rating will the trading window have to be closed? At which stage of credit rating disclosure?
Credit rating. Credit rating, as I said, the moment we receive a draft rating letter, we mean whoever is working on that project, whoever is interacting with the rating agency, they get a draft rating letter. So rating agencies, they produce all the documents which they have conversation with all of us, and then in their committee they place all the facts, their learnings, their submissions, and the committee gives a rating to us, to our debt, and that then that the relevant department with whom we are interacting, that department shares a draft rating letter with our treasury department or finance department for that matter. So that's the first time when we officially know that there is this particular rating which we are going to receive. So that becomes the start point of UPSI, and that's when the trading window has to be closed.
Sir, in addition to this, one more question on
Hmm.
credit rating.
Hmm.
Reaffirmation of credit rating is also an UPSI question mark.
I don't, definitely not.
Sir, next question, whether an administrative directive for compliance lapses, which does not include any fine or penalty by SEBI or any other regulatory authority, that will be considered as action taken by SEBI or any other regulator.
Okay, I would make an assumption here that this directive which has come is not falling under any of the line item of point number 20 of para A. And therefore, So that I'm making an assumption, number one. Number two, this administrative direction which is there, what is the impact on my P&L or balance sheet is something which I would like to evaluate. If there is not, it is not material, then definitely no.
Yes, sir. Two more questions. The second last one is, should we consider all events under Reg 30 as UPSI? Of course, based on materiality threshold.
Should we consider all the events under Act 30 as UPSI, of course, based on the maturity threshold? Now, if it is para B item, I think so. Now it is more clear than ever that SEBI will definitely consider it as UPSI. In fact, UPSI definition also consider it as a UPSI. Unless there is compelling reason for not considering it UPSI. But thumb rule is it is UPSI for sure. For deemed material events under Act 30, as I said that we will have to work upon it. We will have to probably put it in our framework that which of them would not be considered as UPSI or when they would be considered as UPSI is something which we will have to do.
Right. So one more question from Ajay sir. The company making disclosure for events which are in normal course of business just for information of the investors, does SDD entry is SDD entry required for the same?
So, sir, here what happens is when we are making this disclosure, and this has now become very, very common. Earlier, automobile companies used to do this. Now we have seen a lot of broking companies also doing this. We have seen real estate companies also doing this. We have seen insurance companies also doing this. SEBI considers this as a KPI. In fact, these are KPI. What we are also disseminating to public at large is our performance. Um, and therefore, these KPIs, if there is a considerable improvement or a considerable lapse, I would say then in that particular situation, it may be considered as UPSI. Again, as I said, that we will have to draw out those parameters and definitely, if we consider it as UPSI, then SDD entry will follow. But again, humble submission is not every time these KPIs would be considered as UPSI, is what I would conclude it. Yashika, I think so. You clubbed Saurabh's question on 39 with Rec 30 only.
No, sir,
Saurabh
that
Sharma.
is,
Yeah,
yes, one
yeah,
more question is there, yeah.
yeah, sure.
So,
Go ahead.
for that, the events related to subsidiaries of the listed entity falling under Regulation 39 to be considered as UPSI or not, subject to materiality. So that is the answer.
Definitely. So, since it is material for me as a listed company, now I would, and that is the parameter which SEBI has applied. Though SEBI has interestingly applied that parameter only for that list. If we see that explanation, it says that if for the list which is provided above, what is for materiality, you have to see para A and para B. However, it's a good enough cue for us that this is the parameter which SEBI will apply, and therefore either we fall in line or we again have a compelling reason why it should not be considered as UPSI. That would be my take. But first thought would be definitely it is UPSI.
Thank you, sir. I think all questions are done from the Q&A, and no other questions from any of the participants. So thank you so much, Saurabh, sir, for this insightful and practical session. Your ability to break down complex regulatory concepts into clear concepts is always appreciated. And I'm sure everyone here is walking away with much better understanding how to handle UPSI more confidently in the day-to-day roles. A big thank you to all the participants as well for your time, attention, and engagement. Feel free to reach out if you have any further queries. We're happy to help. Until next time, thank you once again. Have a great day ahead.
And thank you to you too, Yashika and Arti, who have been facilitating this webinar. Thank you
Thank
guys.
you.
Thank you so much. Have a nice time. Bye bye.